Welcome back to Capital Crew, your go-to channel for insightful analysis on global topics, especially those related to finance and economic trends. Today, we'll delve into a crucial development that's sending ripples through the financial landscape: the Federal Reserve's decision to keep interest rates steady and its upgraded assessment of economic growth. I'm your guide through this financial journey, and let's jump right into the details. In a move widely anticipated, the Federal Reserve, in its recent meeting, maintained benchmark interest rates, holding the key federal funds rate within a target range of 5.25% to 5.5%. This decision marked the second consecutive meeting without a range change following a series of 11 rate hikes, including 4 in 2023. The Fed's decision comes against the backdrop of a robust economy and a labor market that continues to show strength despite earlier concerns. Notably, this decision was accompanied by an upgrade in the committee's assessment of the economy. The markets responded positively, with the Dow Jones Industrial Average gaining 212 points on the session. Fed Chair Jerome Powell, in a news conference, emphasized the ongoing challenge of bringing inflation down to the target of 2%, stating, "The process of getting inflation sustainably down to 2% has a long way to go." Powell highlighted that the Fed hasn't made any decisions for its upcoming December meeting, emphasizing the committee's commitment to making decisions deemed appropriate at the time. It's noteworthy that the Federal Open Market Committee isn't currently considering or discussing rate reductions. Powell also mentioned that the risks related to the Fed's actions against inflation have become more balanced, signaling a cautious approach in the current economic landscape. The post-meeting statement indicated a moderation in economic activity, mentioning that it expanded at a strong pace in the third quarter. Employment gains, while still robust, were noted to have moderated since earlier in the year. Despite these adjustments, the committee sees the economy holding strong, prompting a potential prolonged tightening stance. A key factor in the Fed's decision-making process is the moderation in core inflation, currently running at 3.7% on an annual basis, as per the latest personal consumption expenditures price index reading. Although this figure has decreased steadily throughout the year, it remains well above the Fed's 2% annual target. The market is currently echoing a higher-for-longer sentiment, indicating the belief that rates may stay where they are for an extended period. Market pricing suggests the possibility of the first rate cut around June of 2024, according to CME Group data. However, the Fed's current stance has contributed to surging bond yields, reaching levels not seen since 2007. This increase has attributed to factors such as stronger than expected economic growth, persistently high inflation, a hawkish Fed, and an elevated term premium for bond investors. Concerns are also rising over Treasury issuance as the government looks to finance its substantial debt load. With $776 billion of debt set to be auctioned off in the fourth quarter, investors are closely watching how the market responds. Powell recently mentioned that he believes the economy may need to slow further to bring down inflation. Forecasts indicate a potential shutdown, with the Treasury Department projecting growth to tumble to 0.7% in the fourth quarter and just 1% for the full year in 2024. In conclusion, the Federal Reserve's decision to maintain interest rates and upgrade its economic assessment reflects a delicate balancing act in navigating the current economic landscape. With inflation still above target and bond yields surging, the Fed faces challenges in steering the economy towards sustainable growth. As we move forward, the markets will keenly observe how the Fed's decisions unfold and the potential impact on various sectors. Stay tuned to Capital Crew for continuous coverage and in-depth analysis on global financial trends. And that wraps up our exploration of the recent Federal Reserve decision here on Capital Crew. If you found this analysis insightful, then don't forget to hit the like button, share with fellow enthusiasts, and subscribe for more in-depth content on global financial topics. Until next time, I'm your guide through the world of finance, and this has been Capital Crew.